right, welcome back, everybody. Bernie Sanders coming away the winner last night in New Hampshire's first in the nation primary. When all the ballots are counted, NBC News projects the Vermont senator will edge out former South Bend, Indiana Mayor Pete Buttigieg. With 97% of precincts in, Sanders won nearly 26% of the vote. Buttigieg scored a little more than 24%. Minnesota Senator Amy Klobuchar scored a surprising third place with almost 20% of the vote, while Massachusetts Senator Elizabeth Warren and former Vice President Joe Biden both came in fourth and fifth place, respectively.
And for a look at how the markets and investors may react to the New Hampshire primary and the next nominating contest, I want to welcome Ed Mills, Washington policy analyst with Raymond James Equity Research, and Andy Laperriere, founding partner and head of U.S. policy with Cornerstone Macro. Good morning to both of you.
Morning.
Are you in the Lloyd Blankfein camp, Ed? I'll start with you. You tweeted last night, effectively, that a decision for Bernie Sanders. I mean, he sort of took a knock at Bernie Sanders and what that would do to the market in a very negative way. Do you agree with that?
The camp that I'm in here is that when I'm speaking with investors, they're looking at the Democratic primary as almost a win-win-win scenario for the markets, because what I hear consistently is that if Democrats decide to nominate Bernie Sanders for president, the market thinks that President Trump is near guaranteed to win re-election. They view that as positive for the markets. The second most likely scenario is a protracted battle for this nomination, potentially exposing some of those fissures that caused disunity within Democrats, giving Donald Trump the win in 2016. Or the final scenario is if Sanders' surge fizzles, does that give room for a moderate, especially, more and more questions coming up about Mayor Mike Bloomberg, and that's positive for the market.
Right,
so the way I look at this is that the market is viewing last night's results as a positive and something to continue to stay invested for.
But all in the context, just so we're 100% clear, of Trump winning. The implication.
Not necessarily. I think it's if there is a protracted battle or if it's a Sanders nomination, I think the market is betting that this is Trump's election to lose, right, especially as they look at the economy. They do think that if there is a moderate, if there is a Mayor Bloomberg or someone else that could kind of unite the opposition, Trump is in trouble. But we take off the table some of the policy swings that might come with a Sanders nomination or a Sanders presidency.
Andy, where do you stand?
Well, I agree with that characterization of where investors are. I think that's exactly where investors are. What I would suggest, though, is investors may have to change their minds a little bit. Right now, Bernie Sanders is beating Trump by about 4 points. And if you look at the average of the Real Clear Politics, both nationally and in the key swing states, and if he's going to go on to win the nomination, he's probably going to be ahead by more than that a month or two from now. So I think the idea that he can't win is wrong. He could win. He probably won't. I mean, I agree with the consensus. He probably won't win. But I think that the market is going to have to confront the fact that I think most likely as he gains and wins and gets the momentum that comes with that, the favorable press coverage, the legitimacy that comes with winning a nomination, that he's going to gain in the polls and he's going to look like he has a real shot at beating Trump. And
as Lloyd Blankfein said, he's going to ruin the economy. Do you think that's right? If he does win?
I mean, I think that he would. I think he would do a lot of damage to the economy. But I think from an investor point of view, it's clear that Bernie Sanders wants to reduce corporate profits, and I think so. You have to take that into account. And I think a lot of what he's proposing would reduce potential GDP. And then, of course, you have big sectors that Bernie Sanders is targeting specifically.
Was Blankfein saying that the Russians backed Trump?
Yes.
Because that was their way of ruining the economy. So are they just really bad?
No,
are they just really bad at trying to ruin the economy? No, the economy did not get ruined.
No,
right?
He said and. He said and in all caps, on top of being.
No, I know. But he seems to be saying that the Russians backed Trump the first time with the implying that they want to ruin our economy.
I don't think that's what he said. I think he said they backed Trump. I mean, that's not the implication.
Well, why did they back Trump? Why would they back Sanders to ruin the economy then?
Because I think he says, no, they'll get what they want with Sanders, and he'll ruin the economy on top
in the
of
process.
It.
Exactly.
So they wanted to ruin it the first time around.
That's what he's saying. No.
It didn't work for him.
No,
I know
that's
you're
not
just
what
trying
he's
to criticize.
Fine, whatever.
But let me go back to Ed and Andy.
Good job, Russian.
The thing that I think we're all trying to figure out, though, is, let me do it this way. There are Democrats who are just true never-Trumpers, and Wall Street Democrats that would eventually vote for Bernie Sanders. And oftentimes, you sometimes hear them say when they're discussing this that, look, everything will be gridlocked in Washington anyway. He won't be able to get all these policies through. He won't be able to have that big an impact. Do you believe that?
So I think the question I ask is that, we look at kind of the history of the United States in recessions, and 9 of 14 recessions in the United States have started in the first year of a presidential term, either a new president or a reelected president. And for a politician, the thing that they care about the most is their ability to get reelected. So assume that if there is a Sanders presidency and we are facing a recession, what are the policies Congress is most likely to adopt? And I think we look at something related to an infrastructure bill. Is he able to do something related to student loans, unlocking consumer spending among a segment of the population that has had a lot of debt? Do we see a change at the administration related to housing? And are we going to have more government support for housing, something that would stimulate the economy? I'm not blind at all to the real regulation that he's looking for in energy, healthcare, financials. But I think you have to balance that off of the desire for members of Congress to keep their seats and a desire that would be there to change any potential weakness in the economy. So a continuation of fiscal stimulus, unlocking consumer spending even more, something positive for housing. I think those are the sectors that are going to see a boost even in a potential Sanders administration.
Fair enough.
If I may jump in on that, I and respectfully disagree. I mean, I think if you look at what actually has happened historically is that presidents use recessions to push the agenda that they wanted to push anyway. And if you look at, what President Obama did, you go back to President Bush, President Bush ran on the exact same tax cut when it looked like the economy was doing very well. He proposed the very same tax cut to Congress when we were in recession. So I think that the idea that parties, stimulate the economy, do counter-cyclical fiscal policy, right, that's just not borne out by history. They use the opportunity, as Rahm Emanuel said, never let a crisis go to waste. That is exactly the way every president, both parties, approaches something like a recession. And I think that Bernie Sanders would put the pedal to the metal on his agenda if he's a president of the United States.